Hi, everyone. It's Grant Abbott speaking, and welcome to our session on foreign person, land tax, and also duty surcharges. And I can see Mr. Tim there. How are you going, Tim? It's good to see you right in the forefront of things, as is usual, which is great. Big smiling face. It's fantastic.
How's it going, Grant? Good to see you.
Yeah, you too. So I
Back
know
in the
you've
office today for the first time in a long time.
Sorry.
I'm back in my office today for the first time in a long time.
Yeah, I know it's a bit surprising, isn't it? I think everything is slowly getting back to normality, and my wife was saying yesterday, it's quite amazing that I don't know how they do it, but Mark Wahlberg, and I think we'll all know who Mark Wahlberg is coming out to Australia, and Byron Bay apparently paying $300,000 for a fairly as you can imagine, swanky house there over the next month or so. So he's spending Christmas in Australia, but it's nice when you've got a bit of money to spend, and it just shows you that we're very lucky that we've got obviously people who want to travel around the world to come to Australia, and we're sort of blessed there. So, and I know that that's going to obviously change next year. There's going to be quite, I believe, dramatic changes, and there's going to be huge amount of opportunities for accountants and also financial planners in that succession, asset protection, estate planning space.
Let's say Mark Wahlberg doesn't buy a New South Wales property in discretionary trust, hey?
I know. Although the land tax surcharge of 2%, he could probably wouldn't even worry about. If you're paying $300,000 for a month or so, it's crazy stuff, isn't it? Just unbelievable. So what I'm going to do today is you'll get all the slides from today, which will be useful, and we'll send those out to you later on this afternoon. And in the meantime, what we'll do is I'll go through as far as I can. I want to do a really deep dive on the New South Wales land tax and foreign person surcharge position, and also show you the deeds that you can do on Light Year Docs for $99. Tim will take you through what's available on Change GPS to notify your clients around that. And if I get time, we can go through the other states. But as I said, I want to go through this deep dive and cover all the stuff that's been issued from the Commissioner, and also I've found relevant places where you're going to need to lodge the trustee by the 31st December. So let's go in there. I've got also a bit on South Australia as well, and which is quite interesting. So let's go through. In terms of, I picked this up from the tax office website, and it's quite indicative to consider that was it 2018 when we went to the elections. Was it 2018 or 2019? 2018. Yeah, you can't remember any day. I think COVID just scrambled my brain. But at those days, they were looking at doing a flat rate of tax of 30% on beneficiaries. And of course, we're all pretty concerned there. And you can see here from the numbers in terms of trust, and this obviously would include, large unit trusts as well. But there's more than 900,000 trusts there in 2017, 2019, 2017, 2018. I would expect up to 30 June 2020, we would have hit probably around the 950, maybe even the million mark. So it's quite interesting. And from my perspective, I reviewed one the other day, and it was a deed that a fairly large family conglomerate had been using since 1990, and there was no ability to stream any income for Bamford. I mean, effectively, Bamford was 2010. The Commission issued a ruling in 2012 saying that there's no resettlement if you upgrade your deed holus bolus, even changing the vesting date if need be, subject to obviously your 80-year rule unless you're in South Australia. So, from that perspective is a lot of our clients have got really updated, they need to update their deeds. And with this foreign person, and I was going to say foreign purchaser, but I need to say foreign person now because we're rolling it out into land tax. There's going to be, typically, if we have a look at SMSFs, which have a lot more detailed information there. There's probably around about 600,000. You would expect at least 30% of those would be relating to New South Wales. So you're looking around about 270,000. Now, of course, a lot of the stuff that we're talking about, you need to, we're dealing with residential property. And obviously there's some exemptions, for example, with motels, etc., which you can do a deep dive into. We'll have a look a bit later on. But essentially, there's obviously a lot of those trusts have got property in them in one way, shape or form. So it's going to be a bit of a shock next year when they get their land tax assessment. The government's been pretty good in terms of rolling this out over a period of time. They've had transitional provisions, but they've finally put their hand up and said, look, from the 1st of January, this is what applies. I mean, when you have a look at your practice, Tim, obviously, you're using as a building block trust, as we all do. What are you seeing in terms of like the mix of ones that've got property versus business?
Look, it's about 50-50, I'd say, with what we've got at the moment. Like a lot of our structures are companies, if it's a simpler style thing, with a discretionary trust owning shares in it. But the rest of them would be like trading trusts, or now our preferred way of holding an asset, apart from inside super, is like a leading member discretionary trust. So the discretionary trusts we've upgraded them to your leading member ones. And they're the ones that we want to have properties in. I don't want properties in individuals' names for asset protection.
No, definitely. And I think it's interesting, which will roll out probably, in fact, we might have it ready for your big gig on the 1st of February. Do you want to give a bit of a plug on that one while you're here now?
Yeah, look, 1st of February, we're having Change Day 2 up in Brisbane. So it's going to be the first of the larger events for accounting businesses around Australia. So if you're in Brisbane, it's an easy one to come along to. But we know people from Adelaide and Perth are already planning to come along to it. And we're going to go through all of the things that you really don't get CPD anywhere else, but you will get here. The key things with your business, how to roll out asset protection, estate planning. Grant and I will go a deep dive in that. How to get your prices right, how to get your team performance right in COVID time, and how to de-risk your business. There's so many different ways that you can de-risk your business, including looking at contracts that you've got for software and infrastructure, and how do you get out of them or move on to better things? What should you be paying for the internet? A whole range of other things like that. So it's going to be a great day. And we're going to finish off with Leo Aimano, who's recently joined us, a former ATO director, telling us the top 5 things that clients of accountants tried to get away with, and what we can take away as accountants to de-risk our businesses, make sure that doesn't happen. Yeah, so Grant, you're going to be looking forward to having you there in a big way.
Yeah, definitely on that one, because traditionally we do obviously want, we'd like to have everything in a trust, and as you said, the leading member trust, which is really focused in on bloodline, and from that perspective is we tend not to have our family home in there because of principal place of residence exemption, but we will be rolling out at your conference. We'll make sure we'll have that one, which is backed by a commissioner's ruling, where you can have the property within the trust for asset protection, but utilising it outside, and still gets the principal place of residence exemption. So again, it's a great little strategy that is backed by a private binding ruling. So we'll be rolling that out with all the documentation at that time. But again, obviously, when we go down that track, we have to make sure that it is for non-foreign persons. So let's do a deep dive into the New South Wales and then go through what the New South Wales revenue says. And I'll go through a couple of guidelines. And I think we're going to be shocked, because to me, this is where all the other states are going effectively. So we need to sort of be on top of it. So if we look for the purpose of the duties and land tax surcharges on foreign persons, so this is straight off from the New South Wales Office of Revenue guidelines. Foreign person means a person who's a foreign person within the meaning of the Foreign Acquisitions and Takeovers Act of the Commonwealth, as modified by Section 104J of the Duties Act. Our revenue ruling G9 explains the detail. Now, this is the important one for a discretionary trust. Sorry, my little dogs. There you go. It's painful one. For a discretionary trust, each beneficiary to whom the trustee has discretion to distribute income or property is deemed to have the maximum percentage interest in the income or property the trustee may exercise the discretion to distribute to them. So typically you'll see with other states, they talk about control of a trust being that you hold more than 50% of income or capital entitlements. So obviously if that's not there, then you have to focus in on the beneficiaries. And what they're doing in New South Wales is saying if you're noted down as a beneficiary, then effectively you can be entitled to 100%. So that's how they pull it in. A beneficiary holds a substantial interest in a discretionary trust if the beneficiary with any one or more associates hold a beneficial interest at least 20% of the income or property of the trust, which is important. The result is that any beneficiary as a foreign person will almost always be deemed to hold a substantial interest in the trust. And the trustee will be deemed to be a foreign person who will be potentially liable for surcharge purchaser duty, which is 8%, and surcharge land tax, which is an additional 2% on your existing land tax. Now, this is the important one. Discretionary trust deeds often give the trustee wide powers to distribute income and on properties such as to family or other relatives of the settlor. I don't know why they would say the settlor, that's not the case. In many cases, to charities. If any of one of the potential beneficiaries is a foreign person, the trustee may be liable for surcharge. Consequently, a discretionary trust may be liable for a foreign person's surcharges, even though none of the beneficiaries who actually receive or are likely to receive distributions, income or capital are foreign persons. Now, what has transpired from there is from here, if I just take you out, this was some time ago that this was released. And effectively now we've got another port of call. So I'll just take you up to, you can see here is the preamble or the background I've taken, surcharge land tax. So just bear in mind, the information I just told you about was from 2017. So it was a little bit wishy-washy around the discretionary trust deeds. You can see here, I've just pulled that information straight from there. So, and you've got discretionary testamentary trusts. I might just cover that while we're here, Tim, because I know you did have a look at that. If the trustee of a testamentary trust acquires property under the terms of the will, and if the deceased was not a foreign person, the Chief Commissioner may exempt the trustee of a discretionary testamentary trust from surcharge purchaser duty. If the deceased was not a foreign person at death, no surcharge land tax will be payable by the trustee on principal place of residence of the deceased if the land was owned and occupied by the deceased at the time of death. The Chief Commissioner may also exempt the trustee of a discretionary testamentary trust from surcharge on land tax on any other land that forms part of the deceased person's estate. The exemption from surcharge land tax will only be available for a period of 2 years from the deceased person's death. So again, all of this applies, from retrospectively from 21st of June 2016. But effectively, we can virtually throw away this guideline and move on to the new one, which is a practice note you can see here from the 5th of July 2018. So in this one, we've got there, this practice goes through there. Surcharge purchase duty applies to acquisition of New South Wales resident land, and surcharge land tax applies to foreign persons who are owners of residential land in New South Wales. Surcharge purchase duty and surcharge land tax, together with foreign surcharges, are payable in addition to any other duty or land tax payable. Now, let me just blow this up a little bit so you can see it. Where an interest in property is acquired or by or held on trust by a discretionary trust, the trustee of the trust may be liable for foreign surcharges if any one of the potential foreign beneficiaries is a person. For a discretionary trust, each beneficiary to whom the trustee has ascribed to distribute the income of property is deemed to have the maximum percentage. So we've seen that before. Potential beneficiaries are generally nominated by class rather than name for a number of reasons, including circumstances they do not exist at the time it's executed. So if we have a look here, Mr. and Mrs. Jones, both Australian system primary beneficiaries of the Jones Family Trust. Other primary beneficiaries include their two children, Mark and Peter, under the age of 10. The trust has potential beneficiaries include future spouse and children of Mark and Peter, no other potential beneficiaries. The trust has no existing foreign beneficiaries, and therefore the trustee is not liable for foreign surcharges. the trustee does not need to be amended. So again, if we have a look through there, from that perspective, again, this was going back for quite some period of time. And since that period of time, what we've got now is there's been an update. You can see here an amendment bill. So we'll just go through that particular update as well. So make sure you're up to date on latest changes. So this is the new one. So the last two I've just had a look at have been changed. So now we're going to this new system, and I think this will be ultimately the system that will apply across Australia, which has a tendency to generally be the case. If someone's taxing something a bit better, all the other states lob in for some reason. So the State Revenue Legislation Further Amendment Act 2020 received assent on the 24th of June. Now, this is important. The Act amends the Land Tax Act 1956, the Land Tax Management Act 1956, to clarify a trustee with discretionary trust is a foreign person if the terms of the trust don't prevent a person being a beneficiary. So if we have a look at that, that's a lot bigger than the one that we had before. So if I go through and I'll come back to this one a little bit later on. So when we go through the definition of foreign person, we looked at it before, but essentially now we've got a position that really anyone, if there's a prospective ability to be a foreign person in the beneficiaries or the trustee, then effectively it's going to get caught. And importantly from this one here, when we have a look at it, we've got here obviously there are transitional provisions allow amendments to be made to trust deeds to exclude foreign beneficiaries. These amendments must be made by midnight, 31st of December 2020. Now, in order to do that, you must submit a copy of your trust deed, and you can go to Land Tax online, which I'm doing here, and then you'll need, if you go down here, Land Tax online, obviously you'll have registered details of Land Tax, and you can see here, you need to put the client ID, the correspondence ID, and then you'll go through here and you'll see the client details, view or update your contact details on foreign person status, document upload, send documents to us to support an application or in relation to a query. So what they've done is they've actually done a reverse. There is that unless you are treated as unless you specifically exclude foreign persons from beneficiaries, that effectively it's going to be treated as a foreign person trust. Do you want to have a bit of? I'll just dig around and have a look at. There's another measure there for us that I'll have a look at, the Office of Revenue. But you just want to have a bit of a chat on that one, Tim?
Yeah. So look, again, it comes down to trying to work out straight away how many of these clients of yours will be affected, because I hate it when things are brought in this way. They just assume you're guilty, but you've got to prove you're innocent. And that's what this situation is. We've got to actually remove these provisions from the trust deed, upload it, let Land Tax know in New South Wales, and then your clients aren't going to be hit with these surcharges. So one of the things, Grant, we had a chat about in our team meeting today is what's our approach for letting our clients know? So for all the accountants that are out there listening to this, we looked at two ways of doing it. Number one, do we try to remember, and it's hard these days because we wish for zero tax, we could just do a listing of any client with a New South Wales, property, and then we could just hone in. But that no tax software allows it at the moment. So we're having to go through and get every accountant to think which clients would own New South Wales properties. Are they owned in trusts? And we've put together an email and Change GPS where we'd be able to send that out and let them know what we need to do, the value, the plan, the price, so you can fix this problem. But then we looked at, do we put an email to all of our clients or a blog up that talks about it? And it's funny, Grant, sometimes you send an email to everyone and some clients get really narky, go, well, I don't have a property. Why are you asking me that question? But then if we miss a client, and they don't do this, they're going to be assessed, if they've had a property the last 4 years, for 4 years worth of extra land tax plus the surcharge. And that's going to come back, and the client will probably have a crack at you as the accountant. So our decision has been that we've put together, and I'll show you in a minute, an info sheet which is going to go on a blog, and it's going to be emailed out via MailChimp to everybody. And then secondly, we're going to, those clients that we are 100% aware that we've got New South Wales properties and discretionary trusts, send out a copy of the VPP email today and say, right, we're going to charge $400 per update. This is what we're going to do, and it's going to save you thousands, and this is why. So I think it's important just to think for a minute about what's your approach for letting your clients know. And I think a blanket approach, and you'll see in a minute how we framed it, because clients buy properties and don't even tell you. They tell us when it's tax time, but sometimes they don't tell us during the year. So we're not supposed to be mind readers. And so from that approach, we framed the information that goes out so your clients can't get narky at you. In fact, we're trying to help them. It's really crazy though, but sometimes you send emails and clients think, oh, you're wasting my time, and we're trying to help them. I can't work out the psyche of people at times, Grant.
I know. Well, you sort of, I think it's important to actually raise it and bring that issue to the client's attention, because if subsequently goes down the track and you know what's going to happen, they get hit with a land tax surcharge, then they're going to come back and say, well, hold on, you didn't notify me, you know, what's going on. But at least you'll have the ability to say, look, yeah, we did, here's the element, we did that. I mean, what do you do, Michael, for your clients? Oh, is Mick there?
Yeah, sorry, Grant. I wasn't listening. I had my daughter and she's trying to locate her phone. She'd lost. What did you say?
No, I'm just saying for your clients around, you know, the potential land tax surcharges, what do you tend to do?
Yeah, I mean, I heard Tim, it is a bit of a minefield in terms exactly determining who it actually relates to. And it's, so there's a bit of a process to go through, and certainly I agree with 100% with what Tim said too, is that if you do a blanket approach and send it out, and you can get clients who get upset saying that doesn't relate to them, why are you trying to charge me fees, trying to fee gouge, and other comments such as that. So I think the best approach is the approach that Tim is mentioning in relation to is sending out that proposal and to all of the clients that have New South Wales trusts, and then offering that review service. And certainly that's the ballpark what I believe should be charged. And it's also what I've been speaking to a number of Lightyear members in relation to, well, actually a member a person who's looking at becoming a member, and he actually wants us to review. He's got about 100 trusts in New South Wales, and that was the price that I'd offered to actually go through, review them, get the appropriate clauses, and do the upgrade. So then it was up to him whether he's going to charge or not charge to his client on top of that.
Yeah, and I think it's really important. I'm just pulling up. I've been looking for that damn revenue ruling, and you might know I've pulled up everything apart from that. But in the webinar that went out today, again, I pulled this straight from the Commissioner's guidelines, and you can see here the latest one is that surcharge purchaser duty applies to acquisition New South Wales resident land by foreign persons, and surcharge land tax applies to foreign person who owns a residential. Surcharge purchaser duty and land tax together with foreign are payable in addition to any other duty or land tax. So we've been down there. Okay, so potential Commissioner's practice note on section 104JA, which is the latest update. So what I did is there's a number of examples there, but this just gives you an idea of where we're going. Remember the examples we had before, which Mr. and Mrs. Jones, they had their children in there as beneficiaries. It was held it wasn't a foreign person. Now we've got Mr. and Mrs. Jones, both Australian citizens, are primary beneficiaries of the Jones Family Trust. Other primary beneficiaries include their two children, Mark and Peter, who are under the age of 10. The trust has potential beneficiaries include future spouses and children, Mark and Peter, and no other potential beneficiaries. Now, this is interesting. Remember before, that exact same example wasn't a foreign person trust. Now the trust has no existing foreign beneficiaries, but future spouses and children, Mark and Peter, could be foreign persons. So the trustee is taken to be a foreign person. To be exempt from the foreign surcharges, the trust must be amended to exclude any foreign beneficiaries, and the amendment must be irrevocable. So within the space of 2 years, they've gone from, which is much the same as in, if we have a look in Queensland and also Victoria, there's a tendency there you need to do a self-assessment. That if you had to look exactly the same example, they said before, then there's no foreign persons. Now you're deemed to be a foreign person unless your deed says otherwise. And it's important, as I said before, with that land tax, you'll need to, and I'll send this link through today, is that with that land tax assessment, you'll need to obviously go in by 31 December, update the details and make sure there's no foreign person status, and also upload your documents there in terms of that. Otherwise, there may well be a surprise coming down the track. Now, for that one, what I'll do is I'll just show you what we can do in terms of the deed upgrade. So I've just got here an upgrade of a discretionary trust to a non-foreign person discretionary trust. So let me go through this. I'll show you how easy it is to do. Then we'll go through the other suite. I'll show you where you find those on the system. And again, they're $99 for each person. Again, if you're on, if you're on the unlimited package, please feel free to do as many as you want. So what we've got there is we've got the Smith non-foreign purchaser trust. I've put in there the Abbott-Family logo. I put in the name of the trust, so I've just got the Smith Trust. When was it established? 2019. The date of the deed of variation, so it's the 10th of December. We're looking in New South Wales here. We've got a default clause that goes to RSPCA New South Wales. You'll need to have a look at your original deed. And even if you use one of our deeds, it doesn't hurt to upgrade the deed again. Look for the variation or the amendment clause. In this instance, it's clause 11. If it's been varied before, then just simply put in yes. And look, it's not a bad idea anyway to go through this process, that if you've got a deed that is really post or pre-2016, I would certainly encourage your clients to get it upgraded. And it's probably something that Tim will no doubt do through Change GPS and have a look at that. So we've got a corporate trustee. So I've got Smith nominees here, a proprietary limited, ABN. We've got the registered address. We've got a couple of directors, John Smith and also Sally Smith. We go through the appointor. So we're going through the process. Is there a appointor? Yes, and it's John Smith. We can add another there if we want, if it's joint. Now, when we come through here, one of the important ones is because we're refreshing the trust. It's the same as an SMSF. We get the opportunity to refresh. It's the same thing as if you take a discretionary trust and overlay it with a leading member discretionary trust, then we're refreshing and putting in place pointers. So here we've got, are any of the primary beneficiaries an individual? Obviously we've got yes, and then we can put the individual beneficiaries in there. Are any of the primary beneficiaries a company? Well, that's up to you. I mean, it could well be a bucket company, so you just put in yes if that's necessary. If it's an unincorporated association, I've noted a couple of people talking about wanting to put charities in there. That's where a charity would come in here. So you just go yes. But what I've done is I've just kept out the bucket companies and the charities. We've got the individual beneficiaries. So we've got John Smith and also Sally Smith. So I've added that. So I'll just go down to next, and then we go down to finish the document. So it'll pop up now and you'll see the document will be ready for variation, which we can then send out to the client. Now, because it's a deed, generally a wet signature is required. But look, I think in the days of COVID, it's probably, I mean, the wet signature really comes from a case that's almost 100 years old, which talks about that a deed is on parchment, paper, or vellum. So, which is like animal skin. So I don't think that's a big issue these days. So
we need the accounting bodies to really pick this up and help the government to get through that any document in any state for any requirement can be digitally signed. It's just ridiculous that, it's such a basic thing that we need happening these days. I don't know why someone hasn't made this, a big platform of what they're doing for the members.
I know. It's funny, actually, because there's always pushback, as you can imagine, always from the Law Society. But I think it's just crazy these days. And look, hat tip to a lot of the state governments now, and also federal governments, that many of the hearings, the magistrate hearings, etc., even federal court hearings are now done online. So I think that's for anyone who's been involved in a court action before, having to sit around and wait for your matter to be heard is very painful. Now, you can just have it on the background like a webinar. So it's really, I think this COVID has probably brought us forward 10 to 15 years as to where we would have been. You've seen that work from home. And look, I agree with you, Tim, that it's now, everyone's worked out that it's now an important part of the process. And I would also say...
There's no reason why we shouldn't have them. I mean, we've got two-factor authentication, mobile phones. It actually provides better protection in relation to signed documents than wet signatures. It's crazy.
Well, I'm sure we've all had our spouses who've actually signed on our behalf in some instances.
Correct.
And it's the same thing. It's crazy. So anyway, we've got a discretionary trustee, variation of the Smith Trust to a non-foreign person. So I know a couple of other providers have been out there just having an option of ticking a box, and then that will include the relevant clauses within the deed. I've taken a decision along with Tony. It's better to note in there that it's a non-foreign person right up front, because if you're lodging this with the New South Wales Stamps Office, then, it's pretty important from that perspective is that, they're aware that it's definitely non-foreign person. So when they see that, it gives them that peace of mind. So we go through, I've had a question also on whether there's stamps in terms of varying the deed. So I'll come back on that one. And when I send out this webinar, I'll make sure that it will cover those issues. So the deed of the non-foreign person, we've got the trustee, we've also got the appointor. And what I've done is I've italicised all the relevant ones here. So the trustee was established on the 10th of December. The purpose of this variation is to ensure that the beneficiary, the trustee, and the appointer and any other person associated with the trust is not a foreign person or deemed to be a foreign person under various state duties and surcharges, etc. The appointed trustee have agreed to vary the trust deed. Importantly, as I said before, and I think this is instructive of all of us, that we tend to go down the track and certainly upgrade our clients' SMSF deeds every 2 or 3, 4 years. Now we have a look here, the variation of the trust rules from the substituted trust deed, which is the existing one, to the replacement rules meets the Commissioner's determination on varying a discretionary trust without a new trust or resettlement arising TD 2012/21. Income tax does CGT event E1 or ET in sections 104-55 and 104-60 of the Income Tax Assessment Act happen if the terms of the trust are changed pursuant to a valid exercise of power. So it covers all of that. So we've got resettlement there. The provisions there are above recitals, but the replacement trustee to ensure that no trustee or beneficiary is a foreign person or taken to be a foreign person as defined under various state laws. Now, the important one about that is obviously the big difference is traditionally before these moves into land tax or down in Victoria and also in Queensland, it's also known as the absentee tax as well, absentee land tax. Before that, mainly it was a surcharge. So, for example, you'll see, if we'll get into South Australia, with South Australia, obviously there's a 7% surcharge, but what happens from that perspective, there is no land tax. Now they've worked out that obviously they're making a bit of money on stamp duties. Why not add additional land tax? So I'd expect, West Australia, South Australia, and also Tasmania, which is increasingly getting a lot more strident, to also increase this extra surcharge. So we put in there anyway the non-foreign person. Now we go into the deed itself. We define there, when we have a look at it, we go down the track for here, and you'll see in the beneficiaries of the trust, the primary beneficiary and their spouse. We've got additional beneficiaries in there as well. And then we've got, here, exclusion of foreign beneficiaries. So trust beneficiaries to exclude a person, company or other entity that is to be considered or deemed to be a foreign person, with the result the trustee being subject to additional charges. Now, again, it's a lot, not that it's difficult, but when you're dealing with this, to try and have something that's a one size fits all. And look, I have seen a couple of articles saying that we should have something a bit more specific, and certainly I'll start to look at what may well be the case for each and every state, where you'll be able to pull in and out of that. So that's coming, but the main thing is to get this down, obviously, for New South Wales. In the appoint all clause, and again, it was quite bizarre in the 1990D that I had a look at, there was no ability to vary or impose the appointor. So here we've got, in appointing any trustee, the appointer is to ensure the appointment of trustee who is a non-resident of Australia will not result in the trustee be subject to any surcharge. So again, the way I've written it is that if this is South Australia, obviously that's where appointorship is important. So that clause would have an impact. But for example, in New South Wales, where it's more the trustee and beneficiary, and appointor is not relevant, then you don't have to worry about appointor, which again just seems to be a bit crazy why they would look past appointor. Likewise, we've got here existing trustee may be removed by the appointor or any other authorised person under Clause 7 if the trustee decides to invest in property is considered as a foreign person under any state-based duty. So what we're doing is we're trying to put in mechanisms there that actually capture everything as well. Now, the main one for also in New South Wales is the amendment clause, because again, like anything, if you have a look at QROPS deeds, which are the UK ones, you can come in and set it up and then obviously vary it at a later stage, because that's an easy way out. So when we come around to the amendment, again, we've got here at any time, from time to time, prior to the termination of trustee with a written consent of the appointor made by deed. And again, if there is no appointor, then you don't need their written consent. Alter, vary or revoke any trust or provision hereunder other than this clause. So that means, again, you can get rid of the whole thing. And at no time during the life of this trust make an amendment that will result in a beneficiary trustee or appointor, current or future, being a foreign person. This subclause is irrevocable. So again, that follows straight in for that New South Wales case. So essentially what we want to do is, if we have a look at it and we go in and if I just go and I'll get Tim to put his 2 bobs worth in here. But when we have a look at the trusts, we will be starting to put in subsegments for the trusts so that there will be non-foreign purchaser. But as I said before, instead of just having a discretionary trust where you've got that option, we've made them quite specific, because again, we're trying to, remember, it's on the onus of us to prove to the OSR or the relevant revenue authorities that it's a non-foreign person. And you can't get better than that, having it right up the face. So if you're doing a brand new trust, it'd be a non-foreign person discretionary trust you would choose. And again, that's $99. The one I just did then, the upgrade of discretionary trust to a non-foreign person discretionary trust. When we go down a little bit below, we've got then a leading member non-foreign person discretionary trust as well. With a leading member, how do you explain that to your clients, Tim? What's your key points around the leading member? And then I might come in and have my tuppence worth, and then might get Mick to do the same as well.
Yeah, well, look, for Change CPS members, I've got a 25-page letter of advice that goes through asset protection, estate planning, and explains the whole leading member side of things. The best way I can explain it is, I don't call it a bloodline trust, but I say what it does is it keeps your money, your family wealth, in your family bloodline. And that's really, so with the advice that we give, we say, right, who out of, in a relationship, if there's mum and dad, who's the leading member? Could be dad, could be mum. You work out who's, the more riskier person or generating the income. And then they're the one that's specified. And I use the words, their names, the leading member's name is hard coded into the trust deed. And they're beneficiaries in their family bloodline are mapped into there, and that's it. And it just makes so much sense. I know Grant talks about the royal family, and people that love UK and the royal family get that side of things. But I just talk about keeping your wealth in your family bloodline and having the key person known as the leading member hard-coded, hardwired into that document. And it's different to other deeds because I always need to explain that if a kid inherits some money, then it's going to be kept in this trust. And as a result of that, it's not in their name. So if they are in a relationship that then goes bad, they're not going to lose that asset. Every time I just mention that, my clients say, where do I sign? I want this now.
Yeah, perfect. And you, Mick?
Grant, I mean, very extremely similar to Tim, and I mean, and sitting on more and more Change GPS webinars, I do, and I've been speaking with Tim a lot recently about this. I really love the way they deliver that message in their product through their application and how it mirrors into our documents as well. But I mean, I always go back to the royal family and the way you explain that, and I think that's is a great way to put it. And it's, I mean, it's quite easy because it's becoming more and more prevalent these days in relation to broken marriages, split families, that people are looking for this type of protection. And when you do start that discussion with them, they are very, very positive and very keen to look into it and go through the discovery process a lot more with you. So I find it, for use of a better word, an easy sell and easy discussion with clients.
Mm.
Yeah, and look, I've got a question from Clifford, who's very bright. You know, can you explain the situation regarding a unit trust where some of the units are owned by discretionary trusts? Again, you'll go down and follow through. For the unit trust, obviously it's the 50% rule of capital and income in order to control it. But of course, there's overriding powers from New South Wales Revenue to deem it if, for example, a smaller one controls. But then you'd have to go deep dive into the discretionary trust to see whether that discretionary trust itself is a foreign person, because what they do is they treat that discretionary trust as a foreign person per se. So you've just got to be very careful about that one. And I think, again, you know, from what we're seeing here with New South Wales, it's flipping everything on its head. Is that before it was, well, you actually had to show there was a foreign person there. Now it's actually flipped on its head, is that if there's a prospective beneficiary, which quite obviously be the case, then effectively there's a prospective beneficiary, then it's all going to be caught. To date, it's only New South Wales, but certainly I would expect that to be rolled out at a later stage as well. So that's fairly important. What I've got here on the screen, I'll just go through quickly. Don't want to spend too much time on this because, again, you can do a deep dive. So this was New South Wales Stamp Duty Act in South Australia. Land Tax doesn't pick it up at this point in time. But from 1st of January 2018, if you have a look here, a foreign trust, a trust is a foreign trust in the case of a trust where the beneficial interests are fixed. A beneficial interest of 50% or more of the capital of the trust is held by one or more foreign persons. So again, that's the typical scenario for all the unit trusts. If you have a look at that one, Clifford, across mainly all the states. And in the case of discretionary trust, one or more of the following is a foreign person. And this is funny because this is the broadest that we've got within Australia. So a trustee, a person who has the power to appoint under the trust, an identified object under the trust. So that's, for example, a default beneficiary as well, a person who takes the capital of the trust property in default. So again, they're unlike New South Wales. So again, it's only where there is a foreign person who's involved there. It's a 7% duty surcharge, and it's a self-assessment when you lodge a return. So I've given you a link there that when I send these notes out a little bit later on, you can pull down from there and have a look at that particular interest. While I go here, I'll go through. I've just got a couple of questions from Milan. Do you just upload the amendment deed only or the entire original deed plus the amendment? I would just, well, actually probably Milan, just for the sake of it, I'd probably put in both. It doesn't hurt to put in more than less. because again, it shows that you are a lot more thorough. Of course, they'll only really want to look at the prior one. And again, if you can imagine how many will be lodged, it's going to be interesting. So again, Cush, we had a look at this. Land is owned in unit trust, discretionary trust unit holders. Do we need to exclude foreign beneficiaries in the discretionary trusts? Yes, if it's more than that 50%. I think that's pretty crucial. So does the 2% land tax surcharge apply to all testamentary trusts with residential property? We saw the exemption, but my understanding, and I'll come back on that one, Graham, a little bit later on, and I'll just find the relevant ruling from New South Wales Revenue that it does, I believe, from the 1st of January to 2021. But leave that with me. I don't want to again jump in. I want to find the exact clause for you, and I'll put that in the notes as well. Cush does upgrade to leading member discretionary trust exclude foreign beneficiaries. No, not specifically. So you're going to have to go through to an upgrade to a leading member discretionary trust, which we had a look at, which is a non-foreign beneficiary discretionary trust. So I had a look through the ones there, and it must be in our hub. So I'll get that up and running within the next day for that one. So that'll be a deed as discretionary trust upgrade to a leading member, a non-foreign person discretionary trust. Is there a specific section that specifically excludes unit trusts and SMSF trusts? No, unit trusts are caught as foreign trusts, as we've seen. I just want to show you when we get into Queensland around SMSFs, which I was a little bit shocked about. Paul Foley, please clarify, is only applicable to residential property in New South Wales. So correct, commercial property in New South Wales remains exempt. That is correct. So again, I'll send you through, you've got all the details, and send the links in terms of the, I think in Victoria it includes commercial property, but I'll send you the links for the New South Wales ones that I showed you before, so you can go and do a deep dive for it. Victorian State Office of Revenue. So from the 1st of March, they applied a practical approach. So there's an 8% surcharge, and you'll have a look in a short period of time. There's also, there's effectively also the absentee, but the provisions have been in place for more than 4 years, and the special rules for discretionary trusts are better understood by all, or at the very least all advisors on Victorian state taxes. According from the 1st of March 2020, the State Revenue Office will no longer apply the practical approach, which you don't really need to know anyway. Instead, the special rules for discretionary trusts will apply to all discretionary trusts, including family discretionary trusts. So if the discretionary trust has any potential foreign beneficiary, the trust will generally be a foreign trust for the purpose of the provisions. So what does that sound like? That sounds like the New South Wales solution. So we're now moving down that track in Victoria. If Victoria and New South Wales do it, I can tell you the next cab off the rank is obviously going to be Queensland. The State Revenue Office notes that this change may cause the continued use of some discretionary trusts that do not include express beneficiary exclusion clause for foreign natural persons, foreign corporations, or trustees of foreign trusts to be a foreign trust. However, this outcome is considered to be the result of broad beneficiary clause in the trust deeds, which are within the control of the purchaser. So effectively, we need to do this obviously for Victoria. Here, if you're a purchaser or transferee of property in Victoria, you enter into contract, agreement, arrangement on or after, you can actually put the information in under the digital duties. Now, in fact, I don't think I've got, I didn't get round to Victorian State Office, but we've got, I'll put a slide up here around the absentee tax, the absentee land tax, which follows exactly the same lines there. Queensland Treasury. So this is, again, the absentee. I haven't looked at the surcharge, so I've sort of put in the Victorian one, and now I've got the Queensland. This is the land tax issue, the absentee. So public ruling, LTA, foreign corporations, foreign trust, interests of foreign persons, related persons. This is an interesting one. So this public ruling clarifies how interests of foreign persons and related persons will be considered when determining whether foreign persons have a controlling interest in the corporation, or at least 50% of the trust interest in a trust. Each of the following are foreign persons. An individual is not Australian citizen or permanent resident, and you've got to be very careful about the visa. You actually need to show that a person is a permanent resident, a foreign company, or a trustee of a foreign trust. Now, a trust is a foreign trust if at least 50% of the trust interests in the trust are foreign interests. Now, again, if we go down that track and we have a look at it, a foreign interest is any of the following: a trust interest of an individual who is not an Australian, a trust interest of a foreign company, a trust interest of a trustee of a foreign trust, or trust interest held by a related person or person mentioned in A to C above. Now, here we go. Trust interest in a person's interest is a beneficiary of trust other than life interest. For a discretionary trust, only a taker in default of an appointment by the trustee can have a trust interest. So we have to go back and have a look at the default. Here's that interesting one, which I haven't seen pop up in any of the other states. For a superannuation fund, a member of the fund has a trust interest in the fund. So I need to go in and do a little bit more research in the legislation around there, but it looks as though super funds may well be caught under that land tax surcharge, which seems to me to make sense. But again, because the surcharge is, because a superannuation fund is a fixed trust effectively, it's going to be very unlikely that 50% of the interests are going to be from foreign persons, because otherwise you would not be an Australian self-managed superannuation fund. So again, I haven't had a chance to do Western Australia and also Tassie, but I will blow this out a little bit further and send you some information. So I'll send all of this out tomorrow with beefed up notes, etc. there for you, and also just a copy of our non-foreign persons trust. So again, the ones that we've got is the non-foreign person discretionary trust and light year, the non-foreign person leading member discretionary trust, the upgrade to the non-foreign purchaser discretionary trust, which is the one that we, foreign person, which is we just did, and then the upgrade to the non-foreign person leading member discretionary trust. So again, I would go through that process, and I think every state, it's not a bad idea to actually go through that process. You can either wait for the land tax moves in place or the absentee, or actually go through that process now. Before I do my final ones, any things to note, gentlemen? Tim?
If you want, I could briefly share my screen to show the style of thing that we've put together for Change TPS members.
Yeah, fantastic. I'll stop sharing. And there you go.
Brilliant. Let me just see if I can do it. Here we go. Try screen 2. Fantastic. Can you see that?
Yes.
Yep, perfect.
Okay, so using our VPP approach, what I've done is gone through and saying, and this will be available this afternoon for Change TPS members, this is the problem. And the key part here, what we were talking about earlier on, is we don't want to bug our clients with information that mightn't apply to them. But we bear the risk that if we don't send this out to everyone and they've bought a property and haven't told us, they could then blame us. And I think that's unfair, but this is the litigious world we live in today, so we need to de-risk. So the way I've framed it is, hi, this information below could save you tens of thousands of dollars. Hopefully, if I got an email like that, I'm going to read it. So you need to get their attention. The problem, and I said here, while we are made aware each year of your property transactions for tax return purposes, you may have recently purchased a property that we are unaware of. And this is why we're sending all of our clients this important update. So you see, we frame it that way. No one can then get upset that we're bugging them with an email that mightn't apply, because we don't know if it's going to apply or not. And then we go, do you have a discretionary trust that's purchased residential property? And here I've clarified that, including vacant land or farming land, which is zoned residential in New South Wales from 21st June 2016 onwards. Or do you have a discretionary trust that owns an interest in other entities that own residential property? If yes, you may be affected. Then we just go into what is in the solution, and they need to contact us. And similarly, with Change TPS members, we've got the VPP email. So we go into, okay, what's the value, the plan, and the price. So all of this content is here ready to go. I'd recommend getting that first document up on your website as a blog, and then following it up with this email, which then quotes the amount that you'll charge. And we're going to charge $400 plus GST.
And you've got to be careful because obviously in New South Wales and Queensland and Victoria or everywhere these days, if you've got really high property prices, you'd easily be up for, quite a sizable sum, $20,000 or $30,000. In fact, I heard of someone who did get caught with a $20,000 surcharge and they weren't expecting it. It was a bit of a shock to them, particularly when you get your next land tax assessment. So don't get caught out. It's a moving feast. Obviously use a changed GPS material. How's the best way for people who are not changed GPS members? Because I know you've got a couple of different memberships there. Tim, what's the best way to contact you?
So info@changegps.com.au. Send an email through and say, I'm interested. There you go, David Boy's putting some content up there and in the chat area. And just join us in Facebook, do a search on Change GPS and you can contact us that way. So info@changegps.com.au is the best way, or just go to changegps.com.au and check out our website. Contact us, we'll be able to help you instantly.
And as I said before, we started with New South Wales that had this flipped everything on its head and deemed everyone potentially prospective beneficiaries to be obviously caught as foreign persons. So that's why we exclude it, and we exclude also the ability to vary the deed. Expect that's already gone down to Victoria, and I would say that that's now going to be picked up through each and every state. Because remember, this is about extracting more money out of the populace, whether by surprise or not. And of course, the advisors are the ones who get caught. And given the budgetary deficit, the fact that both New South Wales and Victoria are no longer AAA rated, they might say, well, this isn't going to impact the interest rates, but long run, it does impact the ability to get funds later on down the track. So expect that that's going to be rolled out. As I said, it's $99. You've got unlimited options. Don't forget the leading member suite. As we said, it's not a bad idea that if you are going to go through and upgrade the deeds, and honestly, if you've got a deed, anyone who's got a deed that's pre-2016, I would strongly recommend that those deeds be upgraded. I just think before the Commissioner's guideline on this and Bamford, we tended to say, oh, this is going to be resettlement, it's going to be capital gains tax and stamps, but it's not the case now. And, there's quite an authoritative body of law around that. So we want to get everything up and modern and not have that old parchment and vellum deeds that are sitting in the back of our closet. We have had a couple of instances having to do with lost deeds as well. Change of trustee, lost deeds, lost discretionary trust. So if you want that at Abbott-Family, we can provide a solution for that one as well. And if there's any issues, contact us at Lightyear Docs or obviously Change GPS or Michael directly as well. Don't forget the 1st of February, Change GPS in Brisbane. So looking forward to catching all of you there. We'll send some information out to all our Lightyear guys. So it'll be a great day, and look, there'll be a lot of amazing strategies. The SEPEPA working groups will be starting in January and February, and in March, from 18th of March, starting in Perth, we'll have our Lightyear and also Change GPS across Australia tour. So we're looking forward to getting out there, and hopefully there's no big COVID breakouts in any of the states. So it's great. And I can tell you, we did a session in Gold Coast a couple of weeks ago, and it's great to do these Zoom webinars, but it's a huge difference when you're face to face, and it's always the best way of learning from that perspective. So that'll be out very shortly. So watch out for that. This will be from our perspective, our last webinar for the period. But just to let you know, I'm not sure, are you closing down, Tim, over the break?
Yeah, Grant, we'll be closing down from next Wednesday. Actually, next Tuesday. Wednesday, we'll have our year-end team party, and our office opens on the 11th of January. For anything urgent, I can always be contacted. But we're trying to have a bit of a break. I'm trying to actually write a little bit of material.
You and Michael are helping me write that asset protection book, and
so I was
sending in the chapter.
There's a
So
separate book I'm writing with David Boyer as well. So there's 2 books we're writing at the moment, which are going to be fascinating reads next year, let me tell you.
and you, Mick, what's up for you?
I'll be around and working through the break. I've got a few different balls I'm juggling at the moment, as you're aware of, and we'll be also starting to look at reviewing a number of our documents as well through that period. Gives us a bit of capacity to do that.
Yeah, so from our perspective, we're working hard. We've got our next level of solutions documentation coming out, and it'll be so much better than what we've got at the moment. Not that what we've got isn't great, because we'll have a lot of integrations, but it will be mainly for our subscribers, our strategists, and also our licensees. So that'll be out and running, so you'll get to see that in March. In the meantime, a couple of things. I'm working all the way through, so I get too bored. When I sold out a light year, I had 2 years off, and it was just so boring. So while I've got the ability, I'll be working pretty hard throughout that time. And look, if we don't get in touch since then, please, everyone have a great Christmas. It's been an interesting year. And look, I think there's going to be more and more surprises as we go down the track. And one thing I think I've learned out of this year is that don't take anything for granted, and that, you might plan something, but before you know it, something can come along. You have a look at all those disastrous erosions of beaches, etc., from Noosa and, Byron Bay. And look, you just don't know what you don't know these days. So we've got to be nimble, keep your cash flow up, and then, really look after our clients. So have a great Christmas and also a fantastic new year. We've got, I think it's in the first couple of weeks of January, that we'll be going through a business planning session. So I'll definitely get Tim and Michael on that one as well, so that we can plan where we're going for the calendar year, and really make sure that we're in front of the pack, because you don't get to get behind. I had a advisor contact me today and said, look, I'm finally, I've shown them the system about 3 times and finally ready to get on. It was like, well, if you got on when you first saw it, you probably would have made easily like $50,000 to $100,000 in the meantime. So again, this is important stuff that we're doing for Australian families. But anyway, it's from Grant Abbott. Do you want to give a bit of a Christmas cheer, Tim, and also Michael?
Hey, look, I'll say to everyone, change is the new normal. So we're a bit ahead of the curve back in 2011 with the change group, but you've got to embrace change, make it a positive thing. And, we're just at the beginning of lots of things, lots of changes everywhere it's going to happen. So don't sit back, as Grant said, and think, why is this all happening? Be proactive, get to the front, make some positive decisions on things. I'm looking forward to catching up with Grant and Michael and also David Boyer early January, so we can plan some things out. Everyone, have a safe time over the year and hope you spend some nice time with your family. Enjoy the cricket and the barbecues. Grant, when I'm up at Noosa, I'm looking for you and a bottle of red.
Yeah, I've got a really nice Malbec here.
Fantastic. I look forward to catching up with you and Michael as well. So see you, everyone.
Michael?
Yeah, I mean, as Tim said, being proactive is the key. And we have had an interesting and difficult 12 months, but I'm really excited and pumped about 2021, and I'll be spending my break in getting things ready to go and hit the ground running. And I can't wait. So I'm really looking forward to it.
Yeah, look, on that one, there's a couple other questions. Darren Garvey, if you've got a unit trust, you've got discretionary trusts, absolutely you'll need to upgrade your discretionary trust deeds, because they'll be treated as foreign persons. And sorry, I forgot about it. I have got a session on Thursday. I'm so dopey. It's COVID. But I've got a session on promissory notes. So for those of you who don't really know the magic of promissory notes, we'll be going through all of that. And as an aside, it's quite interesting. Tony is running a case in the AAT as we speak, which deals with the commissioner taking action against someone for the cash flow bonus. So we're now starting to see a lot of objections coming up. And now, obviously, we're going to see a lot of decisions going, or sort of a lot of objections ending up with the AAT. So that's going to be an interesting one for all of us. So just watch out for that one. Anyway, it's Grant Abbott, Tim, and Michael signing off.
Thanks, Grant. See you, everyone.
Bye, guys. Bye.